Recording in progress.
Very good afternoon to all of you, and I welcome you all to our study group meeting. We have with us CS Raj Kapadia ji. He will be guiding us on all the annual compliances of companies. So without taking much of your time, I would like to invite Nidhi Lalpuria ji, who is also a core group member, to introduce our today's faculty. Thank you, Purvi. Our faculty for the session, Mr. Raj Kapadia, is a fellow company secretary and a law graduate. He is the founder of RK Kapadia and Associates, providing full range of services to the global clients in setting up of business in India, and also handhold them under applicable compliance, statutory, regulatory, and representation aspects. He is registered as a trademark professional under trademark rules and provides intellectual IPR services. He has completed postgraduate diploma in digital business jointly from Columbia University and MIT Sloan. He has been co-opted as a member of Professional Development Committee of WIRC of ICSI. He has been elected as convener in the Commercial and Allied Laws Committee of the Chamber of Tax Consultant and is also active member of Research and Publication Committee of CTC. He has addressed various forums, and I'd like to now welcome you, sir, and the floor is yours. Thank you, sir. And so I request Chintan and Bhavish Bhai to give a memento to our learned speaker as a mark of our love and affection.
RBG someone.
Achha.
Yeah, definitely. Yeah.
Thank you. Thank you.
Yes, sure. Very good afternoon, Nidhi Madam, Purvi Madam, Bhavesh Bhai, and all the core team members of the study group of JB Nagar CPE Study Circle of WRC ICA, my dear members, students, and all the attendees, participants of this meeting. A very good afternoon, and thank you. So the topic for this session is annual company law compliances, and we will try to touch base upon the various compliance aspects, which has there actually recently there have been multiple such adjudication orders as well, which have imposed harsh penalties for some missing gaps of non-compliance. We will also cover those. So the broad coverage of this session would we will start from the various forms which are there other than the annual filing forms, which are for balance sheet, annual returns and all. We will start with those forms. Then the directors part, there have been some recent amendments. The directors, all the compliances with respect to directors have moved from the old V2 portal to the new V3 portal. There have been some amendments with respect to compliances, which we will be discussing. We will also check some of the adjudication orders as well, which have come with respect to directors. We will check, we will also touch base upon small companies, the one-person companies, the private companies. So what is what are the basic features, and what is the differentiating factor? Then we'll do the annual filings, the meetings, briefly the board meetings, the annual general meetings, and those aspects we will try to cover. We will also touch base upon the LLP aspects, which have the filings which are applicable to LLP on the annual basis. So LLP, we are having the second session exclusively on the limited liability partnerships and formation and conversion. So in this session, we will discuss about the annual filing and the compliance aspects. And there is just 2-3 days back, there is the recently announced condonation of delay scheme for LLPs, which we will also cover briefly. What is it? What are the features and other aspects? So why is it important? The compliance filings are also very important. India is all set to become a $10 trillion economy, $30 trillion by 2047 as per some estimates. So in a way, every year, India would be, the GDP would be growing by almost $1 trillion every year now for the next many years. So this, with this exponential growth, there is a clear-cut demarcation between ownership and management aspects of the company, and the companies are now, they have an added responsibility to manage the stakeholders as well. So whatever details are required in whichever forms are required, it is mandatory to share with the stakeholders so that the stakeholders' interest is safeguarded. So stakeholders, mainly the shareholders, the government, the regulators, all those aspects. And we as professionals, we play a dual role. One as the catalyst between the regulators and the companies. And we will also discuss in some of the adjudication orders how professionals also have been made liable for these filings. And penalty has been imposed on a professional. We will discuss that in the course of this session. Think, will be streamlined, hopefully, just like MCA. Then, great, yes. This is proper. But here, I think.
नहीं उसको नीचे करना है ये कंट्रोल करना ना
ये ना
Here, I.
कंट्रोल करना इसके बाद होता
Function keep is.
तो तिथे आलो आगे काय
Now it's coming here. The duplicate करूँ?
डाल ठीक सॉरी थैंक यू
Oh, perfect. Yeah, so technical issues resolved. So just as you told, sir. So yeah, so we were talking about the dual responsibility of the professionals, which we will discuss. So we'll start first with this MSME1 form. It is basically a semi-annual this compliance wherein we have to report the dues to MSME. So something about briefly about the what regulations are applicable. So this enforcement of this form MSME1 comes under section 9 of this MSMED Act, wherein government is enabled to have measures to promote the MSMEs. So what are in 2020-21 by way of an announcement, the scope of MSMEs was widened to a large extent. So currently the micro, small, medium, so medium enterprises, if you consider the turnover, local turnover up to 250 crore rupees INR are now considered as SMEs, which covers a large base of organizations. So till 50 crore of turnover and 10 crore of investment, it is a small company. And till 50 crore of investment and 250 crore of turnover, it is a medium enterprise. So it covers a large base, and that's why this safeguarding of interest is also mandatory. And the provision, as we can see, section 15 and 16 of MSMED Act. So the dues to MSMEs have to be repaid by 45 days from the date on which they are due. They have been accepted. So date of acceptance of goods or services, within 45 days we have to make the payment to this. So but the 45 days, if your normal in the course of business, suppose the credit period is 30 days and not 45 days, then 30 days will be considered and not the 45 days. So that has to be considered. So basically the idea is to promote the MSMEs. And if the payment is not made within 45 days, then the interest rate at 3 times the market rate is to be charged. So one is this MSME1 form, which is there, and also likewise for LLPs, we will also discuss. So for the companies and LLPs, these type of disclosures of dues to MSMEs are there. And I think by way of recent budget announcements as well, for this 43B of IT Act has also been amended to promote the so the payments made to MSMEs. So government is focusing on that. It's, as we discussed, it's a half yearly return. So for first half of the financial year, April to September, now for this 23-24, by 30th of October, it will be the due date. And for second half, the due date, which is October to March, the due date will be by 30th of April of every year. And if there is no this payment, so if there are no transactions to be reported, so then nil return is not required to be filed. So form, so briefly about the form, we need to have the like invoice wise. So per due date. So if there are multiple due dates, multiple invoices, multiple due dates to the supplier, then relevant multiple entries will have to be done. So name of the supplier, their PAN number of the respective supplier, the amount which is due, the due date which is there, and the reason for the delay has to be mentioned. And per form, 100 entries are possible. If there are more than 100 such entries, then you will have to go for multiple forms. Corresponding also Schedule 3 disclosure, the amendment has been made effective from the previous financial year, wherein there is a separate schedule of trade payables along with the aging analysis that also is there. So why I have mentioned this specifically? So in the V3, so currently the annual filings, as you will see, they are still in the older this V2 format. Once they are also in the pipeline now to be transferred to the V3 portal, and there are features that most of the data will be pre-filled. It will be checked at the end of this regulators. It will be cross-verified that what information is shared in this form versus the disclosure in your the annual filing. So there may be future the details may be verified as well at the end of regulators. So which is why this is important to note. And what are some points which can be done from the end of companies? So probably you, just like we obtain confirmations of trade receivable, trade payables, likewise, the suppliers, are you MSME registered? Then please obtain all the details, the Udyam certificate. You can verify the Udyam registration from this portal, their website. All the older Udyam numbers, so Udyog Aadhaar or the EAM number which are there, have to now mandatorily obtain the Udyam number. So fresh registration is required. Also inform your customers if you are as an entity, your relevant companies are if they fall under Udyam and if they have obtained, then also inform the customers as well. So in brief, this checklist is there for MSMEs. So next we come to another annual, the annual compliance, which is DPD3, this e-form, which is for multiple purpose. One is for a deposit return and one is for the particulars other than deposits. So normal in the normal course, the due date for this DPT3 is 30th of June. However, for this year, specifically for details for financial year ending 31st March 2023, the due date was extended. So due date was not extended, but the payment by 31st of July, the late fee was waived off. So due date remained 30th of June, but till 31st of July, you could file without late fee. And if it was 1st August, then the period of delay was 2 months. It was considered as 2 months, and accordingly, the fees were levied. So briefly, DPT 3, the enforcing rule is Rule 16 and 16A of the company's acceptance of deposit rules. It is used for return of deposits as well as particulars which are not considered as deposits. And every company, it is applicable to every company other than government companies. There is a amendment in rule wherein the auditor's attestation is mandatory, and there was some confusion as well for filing of previous years because it was now migrated to the V3 portal. So there are some changes in these forms also in the V3 portal, which we will see. There was that auditor's attestation was mandatory for this form, but then it was then clarified that if it is only for other than deposits, the particulars which are other than deposits, then for those cases, the auditor's attestation is not required. For if it is a return of deposits, then auditor's attestation would be required. The nil return is again not required if there is no transaction here. So briefly, what are the particulars? The net worth as per the recent audited financials. This if on the V3, if this is for other than deposit, then this portion is not required now to be this. We can straight away mention what are the relevant transactions. So these basically are receipts into the company, which are normally in the financial statements are shown in the liability side, whether it is any bonds or debentures issued, whether any secured, unsecured loans, some advances which are payable. So all those things which are shown, they need to be disclosed in point number 15 of this form, which are for other than deposits. So for example, if received from government, whether by way of grant or any other means, whether central government, state government, so any banking facility, so facility from banks, which also include NBFC, cooperative bank, and other scheduled banks which are defined. So any such amount is to be disclosed here. From any other company, which is also important, it is mentioned company and not body corporate. So other entities, nahi. For companies, it is exempted. So this is also important to note. The money received against any offer made for instruments, bond, or NCDs. So if any debenture or bond is to be issued and money is received in lieu of that, that has to be disclosed. If then it is money received from person who was a director at the time of receipt. Important to note is at the time of receipt. So subsequently, if the person has resigned and then still money is received, then it needs to be checked as per the rules whether it is deposit or exempted. Then during the course of business, which I told that any advance in the course of business, if it is a routine practice in the course of business, then that amount needs to be disclosed. Brought in by promoters in stipulation of lending financial institution. So if any promoters have helped the company by way of any funding. Yes, there is. It will. Then any mutual fund, AIF, REIT, if there is any amount received. And so for V3, what is changed as compared to V2 is that the changes during the year. So opening, current year, addition, deletion, closing is to be included here, and also with the aging. So this needs to be careful. So in Schedule 3, there are, so for all items in Schedule 3, this aging is not required. But here, for all items now, they are required. So whether less than 1 year, 1 to 3 years, or more than 3 years. So that needs to be taken care of. And as we talked, that auditor's attestation is now not required for other than deposits. If it is for the deposit purpose or for both together, then the certification is required. Then we move on to the director's. Yes. loan from shareholders. So we need to consider what is it, whether if it is in stipulation of any lending institution, if in that lieu it is there, then we can consider it as a promoter contribution, but not otherwise. We need to examine whether it will fall under the relevant. These all items which are here, these are all mentioned in the rules which are there for exempted deposit. So we need to check in the rule 2, which defines deposit. It is a excluding definition. So we need to check the actual nature. If it falls under this lieu of lending, yes, then it will. Then we need to. It will. Yeah. Members. So it members. In members, it will exclude, but then again, we will have to examine what is the nature. If it is against any if it is against any securities probably, and if they are not allotted within the due date, then also it is considered as unsecured loan you are taking. Yeah, so then that is allowed. From members, it is. Sorry. In the promoter, so I have mentioned only the brief this thing. There are sub points. There are multiple 5-6 sub points. So in that, yes. So in that only you. Then we move to the directors, the relevant producer. In members, so received from members, then this is considered as exempted. It is a exempted deposit. Under this only, in promoters, there are multiple options. We need to select and then put that. It will have to be disclosed. Any whether secured or unsecured loan from members of the company will have to be disclosed. Yeah. Exempted. It is. Right category. All those, yes. Shareholdings and all that we will have to examine. What are this criteria? All that we will have to be checked and accordingly this disclosed. Next is this relevant portion of directors, and so this portion will cover the KYC, the disclosure of interest, the appointment of directors. Some relevant updates are there, and there is 1 or 2 this adjudication orders, which also we will cover. So one is this DR3 KYC annual requirement. So of course, this is all now on the new V3 portal. So that will have to be so. If it is a director, which is, I think we'll cover it in the next slide. So now it is mandatory for basically all the DINs. So any person who has a DIN, even if disqualified by MCA for whatever reasons, even if disqualified, you need to first comply with this, and then whether like further process. So if DIN is deactive, then no other activity is possible. So that needs to be that is to be noted. And also for LLPs as well, for all designated partners whoever has a DIN, for them also this requirement is mandatory. On the V3 portal now there are 2 options, the web form and the DR3 KYC. We will discuss that. So so last point is that if there is any yes sir. If so shareholder, so as a shareholder, that director can continue, but then disqualified for what?
The receipt of time you should be draft. And it is disqualified, then it's okay.
At the receipt, he is a director, then exempt deposit. Once he becomes disqualified, whether he has to vacate the office, I think that also needs to be checked. He is also a shareholder, so accordingly, then yeah. So as a member, he can. As a director, if that person is disqualified, then we will have to examine whether he can continue. He needs to vacate. So what are this we need to see section 167 that he has vacated. Yeah. So as a member, but he is still continuing. So as a member, then it will be exempted. But even in that case, DR3 KYC will have to be, so to keep the DIN active, or else better to surrender. If they are not intending to be appointed again, then better to surrender, because we'll see this adjudication order. If there is any change in the particulars of the dean, so if it is a DR3 this, and if there is any change in phone number, maybe email ID, address, if there is any change, then option to modify is not there. So then we, even as per the law, we need to intimate of any such changes in DIR6. So first file DIR6 and then the annual DIR3 KYC. So this is DIR3 KYC annual, which is the web form which for the deans which are in existence, and there is a form DIR3 KYC for the deans which have been obtained in the immediately preceding year. So for this, the current year, the relevant year would be 22-23. So if any deans are there in 22-23, then the form will have to be filed, and for other deans, there is this web version. So due date is 30th of September 2023 for the current period, and if there is any late fee, the late fee has been provided at 5,000 rupees. What is the difference briefly? The web form, the OTPs will be sent on the registered mobile number and email address. Care has to be taken that the mobile number and email address has to be unique for every director. You can't have now the same particulars for two deans. Yeah, so more than one dean is not allowed now to have the same mobile and email. And you need to confirm all the details, whether with respect to the address and other details. So first OTP is sent, it is verified, OTPs are verified, and then you get all the other details which you need to confirm and submit. For the form, now PAN card is mandatory if you are an Indian national. So if it is a form, then again all these details will have to be submitted with the form. PAN card is mandatory for Indian national, passport is mandatory for foreign national, Aadhaar card. So whichever details you will put, Aadhaar number, then you need to affix the Aadhaar card, proof of residential address, any utility bill, recent utility bill, bank statements, all those things. If it is a foreign national, then it needs to be notarized and translated into English language, and also certified translation in English language that needs to be confirmed. And then this email ID and phone number, the OTPs will be sent on the email ID and phone number, which needs to be confirmed. This is the adjudication order. Then that more than two deans. So one director was having more than one dean. So two deans were there. And this action was taken by the Chennai ROC very recently in July 23, that for obtaining two deans, the penalty of 5,03,500 rupees was imposed on the director. So that care needs to be taken. If there may be such eventuality, then better to surrender the dean which is not active. It is. There are options to.
Suppose that this you're talking when it's a duplicate, right?
Yeah.
But if I have only one, then I don't it to be the director only.
Then also you can surrender if there are no. There is form, we can discuss that. There are options to surrender the active deans as well if there are no, if the director is not in
There are
attendance.
conditions like that. That's the director and the 3-4 conditions. If I don't meet that requirement, then
We can examine that. Then continuing with the directors part, the interest of directors. Here also there are some amendments which have been brought in by recent laws in January when all these migrations.
In any of the financial year,
Yeah.
I will file DIR, the web form, which is for activation.
Yeah.
And you need to pay a penalty of 5,000 for that year to get it activated. But if it has been sustaining for 3 to 4 years,
Yes.
do we need to file a fresh form for it?
No, no, that is not there.
KYC web.
Once you do it, and for that year it will be, and for history also. But then going forward, that active will have to be done. Yes. So here also there are some amendments, so we'll discuss those. While this migration to V3 was there, those amendments were notified. So one major difference in MBP1 and DIR 8, both forms are the disclosure of interest of the directors. But what has been generally observed is that, so one thing is that in the master data and the signatory details, there are the details of appointment and cessation of the director is disclosed on the MCA portal itself. So in MBP1, not just the interest of the directors, so shareholding of the person will come in MBP1, whether that person is a director in any company or a partner or designated partner in LLP, that will come, and not only limited to companies, for other entities as well, whether a partner in a partnership firm, whether proprietary uh, business is there, any proprietary business, whether any trust. So if that person is a trustee in any trust, that will come. And not just that, in MBP1 there are also details of relatives. So the definition of relative as per Companies Act. So all those details in detailed disclosure under MBP1, and that is also an annual requirement, which is to be like signed by the directors, has to be noted in the board meeting and also filed if it is a public this company. For private company and small companies, the filing part is exempt. But if it is not a small company or a private company, then that has to be filed as well. So that is the main feature of MBP1. For DIR 8 and this DIR 8 is only if that person is a director in a company for preceding 3 years. So not just as on the date or as on the relevant financial year. Data has to be seen for preceding 3 financial years as well. So that needs to be taken into consideration. So what is the, so in this DIR 8, so before the amendment, it was only about section 164 subsection 2, which is for financial statements. So now section 164(1) is also included in this disclosure with effect from January 23. So not just 164(2), now director also has to confirm that the person is qualified under 164(1), which is unsound mind, undischarged insolvent, adjudicated as an insolvent, and the application is pending, convicted by a court of any offense, whether involving moral turpitude or otherwise. So all these aspects also the director has to confirm that he is not disqualified under these aspects. That is the amendment. DIR 9 also, so I just noted down because this is relevant in DIR 9 as well. So even here earlier it was just in the qualification in this 164 subsection 2, but now that 164 subsection 1 qualification is also required to be noted here. This is a new disclosure, and this is relevant to cases where director has been disqualified. So by way of MCA order, few directors were disqualified for 5 years for non-filing of annual returns under 164(2), which were the disqualifications were removed over last 2 years. Once those 5-year period is completed, the disqualifications have been removed. So in those cases, DIR 8 form, this disclosure is to be submitted to the company. Company will file in DIR 9 to the ROC, and then that director can be appointed again into the company. So this is the process. And in the V3 form, the following attachments are also included now, which is also an amendment. So if it is a DIR 10 form, then proof of violation or offense is compounded by NCLT. So the relevant order has to be now attached with it. Proof of the violation in which default has made good also with DIR 10 needs to be included, and copy of court order with DIR 9. So if there is any court order which is by way of which the disqualification is removed, then with DIR 9 form, the company needs to attach that order along with the DIR 8, which the director will file into the company, stating that he is now qualified. So again, in DIR 12, there is an amendment with respect to the V2 form. This also form has been now shifted into the V3 portal. Here, when director is being appointed, earlier the company's existing officer and the professional certification was good enough. Now what has happened is that in case of appointment, the director who is proposed, who is being appointed, that DSC is also to be enclosed in the form now. So when it is appointment now, 3 DSCs, one, the person who is appointing, second, the company's director or officer, and the professional certification as and where it is required. So, and another thing that we were filing DIR2 in the V2 form, which is like the details of the director and the whether he is eligible to be appointed and those things. So now, instead of attachment, that declaration has formed a part of that V3 form. The declaration pertaining to no offense, that the number of directors are within the statutory limit and there is no disqualification, that has been added in the form itself instead of by way of a separate this attachment. The director being appointed is now required to sign the DSC, which is followed by the company representative, which is the officer of the company, and then all DSC also in the V3 portal before filing, all the DSCs are to be registered under the relevant DIN number. So for every director, you need to have their respective accounts, register the digital signature with the respective accounts as directors, and then file the relevant form. Yes. Sorry. No, for this, for DIR12, the UDIN number is not required. For these UDIN number. So next section we come to, we'll discuss briefly about these two, the OPC and the small companies, which are relatively newer, this definitions, and also the one that we discussed about the MSMEs, the recently, like I would say 1 or 2 years, within the past 1 or 2 years, the definitions of small companies and OPCs also have undergone a change, which has in a way promoted entrepreneurship culture. So concepts and definitions were introduced for the first time in Companies Act 2013. Previous to that, there was no such definition of a small company or OPC. Basically, the idea is to promote entrepreneurship. So definition of small company, the base of small companies, this was also enhanced by way of a budget, this announcement by the Honorable Finance Minister. The old limits were twofold: paid up capital and turnover. So paid up capital and turnover, 2 crore and 20 crore respectively, were enhanced to double that, up to 4 crore and up to 40 crore. So that also has to be as per the immediate preceding audited financials which are filed. So what happens is that there is a in a way a new regime for a small company, wherein you have a average board report, average annual filing. So the system automatically captures whether that company is a small company or a regular private company, not a small company. So that system itself captures. So this criteria has to be noted as per the audited filed financials. This criteria the system captures. So yes, sir. No, paid up capital, equity. The equity convertible are currently debentures. In a future date, they are. So that will not be considered for this calculation, for this purpose. Any other questions? So what are the brief features? Only a private company can be a small company, and both the conditions have to be fulfilled. This needs to be, so both, if anyone, for example, turnover will cross 40, then it will not be considered as small. Only 2 board meetings are required for small companies with a gap of not less than 90 days. So for the other company, we need at least 4 meetings in a year with a 120 days, maximum 120 days gap. Here only 2 board meetings are sufficient with a gap of not less than 90 days. OPC, startup and dormant companies. So these are also this. So the gap between the 2 meetings, they are exempted from cash flow statement. The small companies, OPCs, don't need to prepare cash flow statements. There is an abridged version of board report which we will discuss, which is applicable for these companies. Detailed disclosures are not required, as we discussed. There is a separate annual return which is 7A, which is also contains lesser disclosures compared to NGT7. And also the certifications of professionals in such forms is not required. For small companies, you can do the compliances without certifications. And the small companies, so which are not considered small companies, if it is a holding or a subsidiary company, company which is registered in Section 8 companies, and body corporate or company which is governed by any special act. So those would not be considered, the exemptions would not be applicable to them.
Is a holding or subsidiary of a small company or any holding subsidiary company?
Holding subsidiaries, yeah, then. The OPC features now briefly. OPC, the one person company, as the name suggests, it's a the only one member. So you, but you can have one, and also the board of director also can comprise of one director. You can have more as well. So any entrepreneur who is looking for having a corporate setup, that differentiation of ownership and management, that benefit and a benefit of corporate this entity, separate legal entity, all those benefits an entrepreneur can now avail if it is registered as a OPC. So it is introduced for the first time, as we discussed, in the Companies Act 13. So benefits of both proprietorship as well as a registered company. And Indian citizen, this was an amendment in the previous year. Indian citizen, and what was amended, whether residing in India or otherwise, can now form OPC. So NRIs were also now allowed to have an entity. And the days stayed in India was reduced. Earlier it was 180 days. Now only with 120 days stay in India, the member is eligible to form OPC. Paid up capital up to 50 lakhs and turnover up to rupees 2 crores. If any of this crosses, then you will have to be converted into a private company within 6 months of that. And there is a new form INC 6 which was notified for the purpose of conversion of OPC to a private company. And AGM is not applicable to OPC because only one member. So even in case of one director, you can't have a board meeting. So by way of a resolution or any letter signed by the director is good enough compliance as per the Companies Act as well as the secretarial standards. So that is not required. So what is different from for OPC with respect to other companies is that for this annual filing, which we will cover in the future in the later slide, AOC 4, which is the financial statements, for OPC the due date is 30th of September of every year. So that 30 days from AGM is not applicable to OPCs. Limited disclosure. So abridged board report, which we talked about. So so there the state of company's affairs, financial positions, any changes, material having material impact on the business. So that needs to be disclosed. Web address, if any, the website link for annual return. If there is any website, then that it needs to be disclosed. Else the MGT 9, which was the extract of annual return, has been omitted. If there is any website of the company, then the annual return needs to be uploaded on the website. The number of meetings, the board responsibility statement. If any fraud is reported by auditors, then if there is any qualification, then the explanation for that, the changes in directors, if there are any adverse orders passed by the authorities, the POSH committee, the prevention of sexual harassment, committee. So these are the only disclosures which are required in the abridged form of board report. Other disclosures pertaining to CSR, if it is not applicable, then you don't even need to disclose. Remuneration to the directors, technology consumption, technology absorption, foreign exchange, all those disclosures are not required in the abridged form of board report. Now, a brief process about this financial statements. One second. Yeah, the financial statements. So a brief process here. Financial statements are prepared, then then the audit is commenced. Financial statements are approved by the board. So here, approved by the board also in the previous year, the rule 4 of the meetings and administration rules have been removed by the this ROC, which means that now by way of virtual board meetings as well, the financial statements can be approved. You don't need to meet physically. Of course, circular resolution is not allowed. There needs to be a validly convened meeting for financial statements, for approving financial statements. So, but that board meeting can also be a virtual meeting. Then it is sent to the auditor's report for their this respective reports, whether statutory report, secretarial audit report, cost audit report. The board report is signed thereafter. Then this board meeting is convened for approving entire set of financials and for convening the annual general meeting. AGM also now can be a hybrid, whether virtual, whether physical. Hybrid mode is also allowed. Of course, the secretarial standards need to be followed for the virtual meetings. Approval of at the AGM and the filings. Yes, sir. Converted into OPC. Subject to the restriction, you can convert. That also is this option is possible. OPC to private is possible, but then also like the member will have to only one member and directors, and accordingly the MOA, AOA will have to be all redrafted. But that will be. But then limit needs to be confirmed with respect to paid up capital and the turnover. That also is. So briefly, the time limits under for the AGM. So these are mentioned in section 96, subsection 1 of the Companies Act. First AGM, if it is this first, if the company is in the first year of incorporation, then the AGM can be convened within 9 months from the close of financial year, which is 31st of December. So the financial year is now defined under the Act itself. So there is no now ambiguity with respect to financial year. So it is 31st of March, and 9 months from then is 31st of December. Every subsequent AGM is 6 months from the end of financial year, which is 30th of September, and the gap. So these both conditions need to be seen together. Gap between two consecutive AGM is less than 15 months. So, for example, if we consider the AGM for 2022 was held on 15th of May 2022, then for 2023, the due date will be considering 6 months, it should be 30th of September, but the gap between this is 15 months. So, that would be 15th of August, which is a public holiday. So, you can't convene a AGM on 15th. So, then 14th, 1 day before. So, that is how it has to be. Now the board report for other than small companies. So like briefly the touch points on details which are required to be disclosed in the board report. Auditors, which are statutory, secretarial and cost audit, the details with respect to auditors appointment, the audit report, if there are any qualifications or any comments, then the director's response to the audit report. There are explanations to qualifications and adverse remarks. So one thing which also with respect to auditors, section 139 subsection 1 and subsection 2 has certain this limitation with respect to rotational auditors as well as appointment for 5 years. So the act was introduced in 2014. These sections have been made effective from 2014, 1st April, and 31st March 24. The 10 years will complete. So then we'll have to examine the applicability in the respective companies, whether this, so for an individual auditor, 5 years, and for a firm of auditors, 2 terms of 5 years at a time. So this point needs to be confirmed for the current financial year. Board report and committees, the composition of the respective committees needs to be disclosed. If there are any changes, then the same needs to be disclosed. Number of meetings, not just the number, but like how many meetings, when it was held, as much as possible in detail. We will come to a adjudication order as well, which is very important for professionals in this case. For this purpose, like how to get the details, we need to check the minutes, whether they are in order. The minutes have been prepared, the resolutions which are there, they have been properly filed. Resolutions for changes in the board, whether the appropriate filings are made, whether the entries are made in the registrar, the registers, the statutory registers, all this needs to be checked. The composition of committees, the committee meetings as well. For that also the minutes and all the records need to be checked. Declaration by independent director wherever applicable, 149(6) subsection needs to be followed. If there are any frauds noticed by the auditors, then the responses to those fraud needs to be a part of board report. So what are the brief process? If it is detected by the auditor under section this 143(12), if it is detected by the auditor and the amount involving is 1 crore or above, then it has to be forwarded to the board and audit committee seeking observations in 45 days. If observations are received by the auditor, then it shall forward the responses to CG along with his comments to the observations, to the responses as well. And if observations are not received by 45 days, then he shall forward the report to the CG stating that he has failed to receive the observations. And the report shall be in a form of statement as specified in ADT 4. And in case of less than 1 crore, the fraud involving less than 1 crore, the auditor shall report it to the audit committee constituted under the section or the board immediately, but not later than 2 days of his knowledge of the fraud. So this also, I mean, currently there are laws which are also imposing strict liability on the professionals as well. So needs to be, this part needs to be kept in consideration. And we'll move on with the board report. So particulars of any loans, investments under 186 section. So we need to check from the financials, notes to accounts, the relevant disclosures, whether it is in the limits with respect to, there are limits under 186 with respect to paid up capital and free reserve. So that needs to be checked wherever applicable. Appropriate approvals are obtained, whether board approvals, shareholder approvals, all that needs to be checked while making the disclosures. Contract with related parties against again the details from notes to accounts under section the AS 18 and other disclosures. This needs to be done, and there is a separate AOC to this format which needs to be filed for the related party disclosures. Again, the joint venture, subsidiary, associates, again from the financials, this there is separate AOC1 form for the detail, like brief detail and outline of the subsidiary, the performance or outline which is there, which needs to be disclosed in AOC1. And extract of annual return MGT9, which we discussed, it has been withdrawn. The section is omitted, but wherever website is there of the company, then this disclosure needs to be there in the website. Next is the policies relating to directors' appointments, CSR, risk management, and cost. So basically the committees and the policies. So the gist of policies as and when applicable, the policies briefly need to be a part of the board report. The respective committees which are formed, the minutes to be checked as well. The respective laws to be checked. For example, this POSH committee as well. There are specific provisions. So which company? So up to 10 employees are there, then you need to have an internal complaints committee. So, and there are processes which are mentioned for internal complaints committee, wherein if there is any complaint received, then within 3 months that complaint needs to be disposed. So all those things also need to be checked wherever applicable. All those relevant regulations are being followed. So CSR applicability also, like currently it is undergoing a change, and more attention is being given to the CSR applicability. Even in auditors report and CARO, there are now disclosures, and this the same needs to be checked. So as per section 135 and rules need to be checked. The committee which has been formed, the CSR committee, the policy which is there, gist of policy, the working of liability, the web link where if any website is there where the policies have to be disclosed, so that needs to be a part of board report. Amount which is spent, amount which is unspent, then how it has ultimately been spent, because the provision relating to now carry forward, brought forward, they have been removed, and now CSR, whatever liability is there has to be spent in whichever way. We will discuss that more. Details of ongoing project and other than ongoing project. If there is any ongoing project, the same also has been defined in the Act, ongoing project up to a 3 years period, which will get completed in a 3 years. If there is any such ongoing project, the same needs to be a part of board report. Detail of any capital asset which is created by way of this ongoing project, and detail of any unspent CSR for preceding 3 financial year. That needs to be disclosed in this. So about CSR, as we are discussing about CSR, there are some recent changes as well. So I thought to outline those as well in this presentation. There is this, if the company proposes to spend this CSR through any other entity, whether a Section 8 company or trust, then that relevant entity needs to mandatorily obtain CSR1 number, which is a unique ID number. This form CSR1, which is there, it is on this is a registration form for a CSR entity. So entity providing this CSR services as the CSR activities which are mentioned in Schedule 7. Form consists of 2 parts. One is relating to information about the entity, all the details, this formation documents and other details, the name, address, and the relevant ID proof, all needs to be a part of this CSR1. And the details relating to the entity who intends to take the CSR activity. Second part of CSR1 is the certification by practicing professional. Once it is submitted, a unique ID number is generated. There is no statutory this filing fee for it. We just need to obtain this number. And some more detail about this the CSR entities. There's a Section 8 company. So there are 3 options: whether a Section 8 company, registered trust, or registered society. If incorporated by the company, then the track record is not required. Then the company itself has incorporated and you can start undertaking activity. If there is, if it is any if it is established by central government or state government, and if there is any other existing Section 8 company trust, then that track record of 3 years of this activity, which is mentioned in Schedule 7. So one of these activity for an established track record of 3 years is mandatory if it is in the third option, that is, it is not incorporated by the company and it is not this government or like central or state government entity. That needs to be kept in mind. And also any entity which is established under the Act of Parliament or a state legislature, that entity also is eligible to obtain. And what are the attachments with CSR1? The PAN card of the entity is mandatory. The mail ID of the entity as well as the authorized person who has signed the document, that is required. Detail of the authorized person signing the document. The registration certificate under the, if Section 8 company, then the incorporation certificate. If trust, then the relevant registration document. And the digital signature of authorized person with the PAN number. And of course, that also needs to be, the DSC will have to be also registered if it is being filed. So that checkpoints have been kept. And likewise, there is this CSR1 for registration and this CSR2 form, which is there, which is like a annual return of the CSR activities which are being undertaken. So this is a mandate. The companies which are undertaking CSR activities, this is a separate requirement which is to be fulfilled. Originally, it was, it is as per the rules, it is like an addendum to AOC 4, which is the financial statements. But since last 2-3 years, the due date has been extended and it has been allowed to be filed by 31st of March of the next year. So even for this, the current year, it is the annual filing season. So for 22-23, now all the annual filings might be in process already, or it may start. But CSR2 form can be filed by 31st March of 2024. CSR2 form. So this may be noted. And this is basically a reporting requirement on CSR for corporates. It's a web-based form. So like in other forms, we are having some details which are pre-filled and some which needs to be updated. This is normally as written, the form shall be filed as an attachment to AOC 4, but for this year, it has been allowed by till 31st of March separately. These rules shall be applicable to all companies on which CSR provisions under 135 sections are applicable, and every company covered under this have to be filed, which we have discussed. Briefly, the key features are here. The form, we have to first mention the criteria that triggered the CSR applicability, whether it is the net profit or turnover or the net worth criteria. Which criteria triggered? In most cases, it would be the net profit probably. Details of the committee. So who are the members, number of directors who are there, number of meetings that that have been held, and number of meetings that have been attended by the respective members. Website of the company needs to be disclosed wherever the website is there. Net profit and other details, net profit, turnover, net worth details are to be disclosed for the immediate preceding financial year. So if we will be reporting now for 22-23, then the previous year, so 21-22, and accordingly the three previous years to. What I am trying to say is that 22-23 we have to consider immediate preceding previous year, 21-22, 20-21, and accordingly 19-20. Yeah. So, and then the net profit and other details, average net profit, total CSR obligation. So if we enter the detail, then those details, the average and all will automatically be computed. We have to then enter what we have actually spent. The details of CSR spent during the year on ongoing and other than ongoing projects, the details of that. So which area, whether it is a local area or other than local. So it is very detailed, this form, and it is covering all the aspects. And if there is so as per this section 135, subsection 5 and subsection 6, if there is any unspent amount, and if it is an ongoing project, then by 30th April of the relevant year, that amount needs to be transferred to a separate bank account. And if even that is not done and the amount is unspent, there is no ongoing project, then by 30th of September, it needs to be transferred to a fund registered in Schedule 7, which is the Prime Minister, the PM Cares, the Clean Ganga, those funds. So here, these details are to be mentioned, detail of transfer, if any, the unspent CSR amount to unspent CSR account or fund which are specified. So if there are any such transfers made, that needs to be disclosed. And also this forms a part of CARO as well as per the amendment. So this also is there. And reason, if the company has failed to spend 2% of the average net profit, that also needs to be a part. So these are some also further points which are there for CSR2, whether any unspent amount of preceding 3 financial year, that is financial years ending after 22nd Jan 2021 has been spent in the current year. Why this date specific? Because this amendment was introduced on this date. So if after 22nd Jan 21, if there is any amount pertaining to previous 3 years which have been spent in the year, then that needs to be disclosed, because that would be a contravention. Whether any unspent amount of this pertaining to 14-15 to 19-20 has been spent in this year, and if so, then the detail of the relevant project. So this is a CSR2, and there is this adjudication order by the Chennai ROC as well. Again, a recent order of July 23. Chennai ROC issued adjudicating penalty of 36.25 lakhs, 36 lakhs on this company and the directors for non-compliance with section 135 subsection 6. Violation pertains to failure to transfer 14.5 lakhs to unspent CSR, this special account. So this is the type of the screws are being tightened, and there is added responsibility now. Otherwise, it would lead to such penalties on the companies as well as the directors and officers. Now, next we come to this annual filing, the financial statements AOC 4 as well as the NGT 7, the annual return forms. So the first is the AOC 4. So this, as per the sequence, first AGM is held as per the due dates which are then, and AOC 4 is to be filed within 30 days of the date of AGM. And for OPC, the due date is 30th of September. So in that, what are the brief disclosures and information which is filed with this form AOC4, the brief detail which are there. So first is the AGM, if it is held, then when, the due date of that, if there is any holding company, subsidiary, joint venture, associate company, so those details are to be mentioned here. Detail of the auditors, the ADT1 which is filed, if there is any casual vacancy in the auditors, then the same needs to be reported. The financial statements, particulars, parameters, all the detailed financials are to be replicated here. The detail of directors or and KMP who have signed the financials are a part of this form. The particulars, the one is the balance sheet and their particulars. So share capital breakup is mentioned here. Principal products, services, the percentage of turnover, all those details are there, and the extract of CSR spending. So board report. So along with board report also, there is a separate annual report. There is CSR2 which is to be filed. Next is again the related party transactions. This is with the board report in form AOC2, which is which gives particulars of related party transactions. So what are the details which are to be filed with the AOC2 is the name of the related party, the relationship which is there with the concerned party, the nature of contract which is there, what is the transaction about, brief particulars of the engagement with the related party needs to be disclosed here. What is the arrangement, what is the tenure, the duration, when has it been approved. If it is specifically approved in the relevant year, then that date, or else if it is a blanket approval for an ongoing arrangement, then accordingly that disclosure needs to be made. And if there is any amount paid as an advance, then that needs to be disclosed in this form AOC2, which forms a part of board report, and also it is replicated in this annual filing form AOC4. As an attachment, we need to upload the financial entire set, including the board report, the annexures AOC2, the CSR, and this annual return. The due date, as we mentioned, is 30 days from the date of conclusion of the AGM. And thereafter, there is a nominal late fee of 100 rupees per day, which is, which turns out to be quite steep. And for a OPC, it is the due date is 180 days from the end of financial year, which is 30th September. For XBRL tagging as well, the tagging is to be done as per the taxonomy applicable, whether it is the accounting standards or the Ind AS, and the same is to be pre-scrutinized and uploaded with AOC4 XBRL form. Currently, all these forms are in the old V2 this portal. It was proposed to transfer it during July and August, but I think that has not happened, and we may, but anytime soon we may have these forms as well on the V3 portal. And as we discussed earlier as well, the matching. So what details we file in MSME1, DPT3. So in this also, whether these are the same, whether there is any deviation, we may. So we have not yet, ROCs have not started sending those notices, but then we may have such notices as well. We never know. So that care has to be taken. Again, there is the adjudication order, the ROC Chhattisgarh. There is a crucial contact information on company's letterhead. Contact information, the letterhead also, the particulars of letterhead are mentioned. What needs to be included is mentioned in section 12. As per that, you need the name, the SIN number, this email ID, contact number, email, all those things. So crucial contact information was missing. In accordance with this, the omission led to penalty imposed at under section 12(8) of this. The penalty amounted to 28,000 rupees per day of default on each director, and the number of days of default is 28 days, and the penalty not exceeding 1 lakh rupees. So the company as well as the directors were deemed liable for the penalty. So this is also another this. So we have seen, I mean, there are instances we need to be very careful with AOC 4 as well. The financials also, wherever company's name is mentioned, so you mention SIN number and other contact details. With the board report also, if it is on a letterhead, then it should be duly compliant. So those, yes, sir.
CSR1, does it have a validity of 3 years or 4 years, something like that, or it is perpetual?
No, once you get it, it is like a company's ID number. So like just a ID number, it is valid. Next is next is the annual return, which is MGT 7, and for small companies the MGT 7A. So what all details are there in MGT 7? If we will see, it will almost cover, just like board report, it will cover almost all the corporate actions which have been taken in the relevant year. In board report, we have already seen. Now in MGT 7 as well, the detail of the company which are pre-filled based on SIN number. AGM held, again, the details have to be done. Business activity of the company, the relevant activity code, the percentage of turnover which is there from that activity. The again, the holding subsidiary, the joint venture details of that, the share capital of the company, ISIN wherever they are dematerialized shares, transfers if they are, so the transfers, the only way of registering the transfers with ROC is through the annual return. So all the transfers during the relevant financial year have to be a part of this, and when there are more than one such transfer, then a separate sheet is to be enclosed along with this. Detail of debentures and securities which are outstanding, turnover criteria, net worth criteria, the composition of members, directors, KMP, how many promoters are there, how many shareholders are there, how many directors, KMP, how many executive directors, non-executive directors, the at the starting of the year, at the end of the year, all it is fairly detailed, and it includes most of the corporate actions taken during the year. So it has so these has to be filled very carefully. The details of meetings held during the year, the same needs to be checked thoroughly, and also the attendance of the directors, how many directors were eligible as on date. If there are any change in the directors, then that needs to be taken into consideration. How many directors were eligible, how many attended. Care needs to be taken if there are many leave of absences. Then if a director does not attend a consecutive any board meeting for a period of 12 months, then the director would deem to have vacated the office. There, all those care needs to be taken. Attendance of the directors, as we are discussing, remuneration paid to any director, KMP, the detail needs to be disclosed here. Whether all applicable compliances have been followed, that detail. If there is any discrepancy, then the same can be noted here or attached separately as an attachment. Any penalty or punishment, if any orders have been passed during the year by the relevant authorities, then that needs to be a part. And also the followed by certification if it is MGT 7. The attachment also, the list of shareholders, debenture holders, that is mandatory. List of transfers, as we discussed, if there are any more than one transfer, then a separate attachment is there. MGT 8, which is a certification by a practicing CS. If it is a listed company or a turnover exceeding 50 crores or paid up capital exceeding 10 crore. If any such criteria is fulfilled, then MGT 8 certification is also required. And MGT 7A, as we discussed, it is an abridged format of annual return for OPCs and small companies, and it doesn't contain certain disclosures, specifically certifications, as we discussed, and also with respect to meetings, attendance, the shareholders details. There, it is a restricted form. In a way, detailed disclosures are not required. Very limited disclosures are here. And as we discussed about the MGT 8 certification, so what we will see these also very briefly, what all aspects are there in this MGT 8 as well. So if you will see, it covers almost all corporate actions again. Yes, sir. Yes. Yeah. Yeah. AOC form. We can, but then that will be a contravention because we need to file both for the year. Yeah. Yeah. Yes. 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 They are. Yes. It is. Yes. Yes, yes, it is. It is. So if it is a contravention. So we need to file both. Yes. What all is included in MGT 8, which is the certification by a CS? Records, forms, registers, whether all are maintained, we need to check whether all are maintained in order. The convening of meetings, whether due notices have been sent timely, 7 days in case of board meeting, and 21 clear days in case of AGM. And accordingly, provisions of the articles are followed, the secretarial standards are followed. Whether it is being minuted, all the proceedings have been minuted properly. Loans to directors, if there are any, then what is the situation? Because loans to directors are generally prohibited, except there are certain exceptions. So that needs to be verified. Changes in capital structure, what are there? Then the same needs to be checked and reported in MGT 8. Dividend, if there is any declared, then the same needs to be declared here, and also whether the payments have been made on time, the relevant provisions, whether they have been followed, transfer to another bank account, then paying of the dividend, the timelines have been followed, that needs to be checked. Signing of financials, whether duly authorized and the personnel and the official of the company, whether they have signed the financials as per the section. Very important again to note that the person who is signing needs to be duly authorized, and also in this records of the company, whether two directors, KMP, in the records of company as per the NCA, the relevant person needs to have that authority and designation as well. Very important to note. Then details relating to appointment, reappointment, casual vacancy of auditors and directors, that needs to be, if there are any changes, then that needs to be mentioned here. Acceptance of deposits, whether the due compliance and all the regulations have been followed. Charges, if there are any charges created, modified, satisfied during the year, then the details of the same, whether the provisions have been duly followed. Loans, investment guarantees, 186 section, whether due approvals are there, that needs to be certified. And if there are any alterations in the AOA, MOA during the relevant year, then that needs to be mentioned here. Again, there are some brief orders. The first one is Gujarat ROC impose a penalty of 6 lakh on companies and directors for not mentioning DIN in the financial statements for violation of section 158 of the company. Wherever you sign, wherever the director signs, DIN number, designation, place, and date of signing is mandatory. Here, 6 lakh penalty was imposed. And very important for professionals, the next order, which is Chennai, again Chennai ROC order, recent, this June 2023. 2 lakh penalty on practicing company secretary was imposed. Practicing CS, who is considered independent of the company, it was imposed on practicing company secretary for 92 subsection 6 for wrong certification of annual return of the company for not disclosing the dates of board meeting. So anything, wherever director is signing as per the law, wherever the director is signing, we need to mention any. Yes, yes. Any document where due authority is there, so that person for this company signed name, designation, DIN number, place and date of signing. These details need to be.
It's not related to
But it is mentioned that wherever director is signing, these details are so explained. It is. That is, they are not.
Writing letter to the bank.
It is, so it is not, we have to, so that's what practice that we are following. Director, that is specific.
Yeah, that is where.
As a director of the company,
You write it that you're an authorized signatory and you're accepting, for that purpose, they don't accept it unless you put your name over there.
this is, so one by one, so I think wherever the company which is caught, then that will be a trouble. As that's the, that is there. And for this as well, so we discussed the role of professionals as well acting as catalyst, but then practicing CS is penalized for wrong certification. The CS, the order is that one date of board meeting was missed in MGT 7. You missed mentioning one in MGT 7 and the CS was certified was penalized. 2 lakh rupees. Next is briefly about the auditor's appointment. We discussed briefly about the same. Auditor's appointment, so appointment in AGM and tenure of appointment is 5 years, except where it is appointed in casual vacancy, then the board appoints and it is confirmed in the EGM, and it is the tenure is till the conclusion of the upcoming AGM, where again reappointment is happened. So in this case, the ADT 1 is to be filed within 15 days of appointment and appointed for a 5 years subject to rotational auditor conditions, which we discussed that it's now 10 years that this act has been in force. So this for next year, it needs to be this tenure of auditors will have to be checked for companies where applicable. And there is a qualification certificate under 141, which is to be included in ADT 1 as well, that the auditor is eligible to be appointed, it is within the limits, and whether any proceedings are pending against the auditor, and ADT is to be filed with auditor's details, membership number, PAN details, all those things. So this with this we did the annual compliances briefly. We have touched upon the those which were applicable to companies. Now we will cover briefly those which are applicable to LLPs, and will also try to cover the condonation of delay scheme which has been introduced, which is just couple of days back this notification has come. So we will try to cover that as well.
Right?
It is.
Don't know where to file what, how to file, and you take 10 days to upload one form.
It is
So
that
basically,
the
go ahead and
transition.
feedback practices.
But that the transition is there. It is it is throwing challenges.
Yeah.
The V2 portal was very smooth. V2 portal was smooth.
Even for this LLP annual forms which form
Yeah.
8 you are filing, I have skipped many because I couldn't proceed further.
It was not possible, which is why I think that is the reason. Probably we may have such for companies as well, because it has been so whichever forms which were there. So even in DI 12 which we covered, we personally also faced many issues at the beginning of the year. So I think we may have such this relaxation, but then once it will be streamlined, things will be streamlined, it will be very smooth, because whichever that we observed, the processing had become very fast and smooth. That is, it is there. So now the LLP. So under the LLP, there are broadly two this annual forms, which are the 11 form which is there, and form 8 which is there. Form 11 is the annual return. Form 8 is the statement of accounts, and also the statement of this solvency as well, which is there. So, And of course, for annual filing, I mean, similar to DIR 12, which we had, there are, if there are any such changes in the particulars of the designated partners who are appointed, removed, if there are any changes in the registered premises, then the relevant forms will have to be filed with the within the due dates. So we'll discuss briefly. Form 11, which is the annual filing of LLPs. So due date is within 60 days from the closure of financial year. So this care is to be taken. It's not 31st of May, but it's 60 days, which comes to 30th of May. So this care needs to be taken. Summary of the changes which are made in the management of LLP during the financial year. So this annual return form in the V3, if you would have seen in this year, most of the details are pre-filled. What we are required to file now, we just have to enter the LLP number and the contribution, the overall contribution, and which is actually received, contribution actually received. And the third point is the disclosure of interest in other entities. So only these details are required. Rest all the details are now being pre-filled in the form, which is a good thing once it works smoothly. That is the thing. So and also, if there is a separate Excel sheet as well, which is to be filed as attachment with this form, containing all the details of these partners and designated partners. Even in that Excel sheet, only these details are to be filled: the contribution margin, this actually received, as well as the interest in entities. Rest details are pre-filled. Nil return may be filed. Nil return is to be filed even if there is no changes or no business by the LLP. It is a mandatory requirement. And even if the LLP is to be struck off, even then the most recent annual return and this Form 8 is to be filed, and then we can proceed for striking of the LLP. So that is the rule. And next is Form 8, which is this statement of accounts in a way. And also the solvency. It is 30 days from the end of 6 months of the relevant financial year's closure, which is again 30th of October. So 30th of September is the end of 6 months. For 2022-23, it will be 30th of October 2023. LLP Form 8 includes a declaration by designated partner on the solvency state of the LLP and also the financials as well. It also contains information about the statement of assets and liabilities and the income expenditure of the LLP. And again, which we discussed about the MSME1. Here, as a mandatory attachment, every LLP is required to disclose as a separate statement of dues to MSME, which is also there in a way to safeguard the interest of this. So just like in small companies, we have a small LLPs also, which has been introduced by way of a recent amendment. Now the contribution and turnover twofold definition is there. So contribution which does not exceed 25 lakh rupees or such higher amount as may be prescribed, which is not exceeding 5 crore. So this is there, and turnover as per the immediately preceding previous year does not exceed 40 lakh or such higher amount up to rupees 50 crore as may be prescribed, which meets such other requirement as may be prescribed and fulfill such terms and conditions. So this has been the small LLP definition. Now currently, as on date, it is the contribution of 25 lakhs. So the capital of 25 lakh and turnover of 40 lakhs. So if it falls under this, then audit is not applicable to such LLPs. This is also by way of amendment which was introduced. The fee structure for LLPs was modified in the previous year by way of amendment. So earlier, quite a few forms were like blanket late fee of 100 rupees per day, like we have for the company's annual filing. So now up to 15 days delay. If you are a small company, then it is one time, and accordingly 15 to 30 days, 30 to 60, 60 to 90, accordingly it is given. And for small companies, it is 2 times, 4 times, 6 times, 10, 15 times, and that way. And if it is beyond 360 days, and for other than the annual filing forms, it is 25 times of regular filing fee. And if it is for the annual filing form, which is Form 11 and Form 8, it is 15 times this fee, the late filing fee, plus 10 rupees per day. which is flat for small LLPs, and other than small LLPs, likewise it is 4 times, 8 times. So 2 times, so twice of the small companies is the fee. So 4, 6, 8, 12, and 30. And if it is other than the annual filing form, then 50 times of regular filing fee is the additional fee beyond 360 days. And if it is for annual filing forms, then 30 times of this. If it is beyond 360 days for annual filing, then 30 times of regular fee plus 20 rupees per day for this beyond 360 days. So it has been reduced from 100 rupee per day from day one. Now it is, I think, it is a much needed relief for LLPs because it was turning out to be a huge compliance burden. And now this part of condonation of delay scheme which has been introduced. Now this will be made applicable from 1st of September 2023, and it will be there till 30th of November 2023. This is specifically for 3 forms: Form 11, which is annual return; Form 3 and Form 4, which is Form 4 is for changes in the designated partner details and partner details, and Form 3, which is for the LLP deed, whether it is the initial deed or the subsequent deed. Now, because of the technical issues as well, it has been observed that the initial Form 3, the initial deed also has not been filed in some of the cases because of various reasons. So now this for initial this LLP deed, which is Form 3, and also for Form 4, it is now proposed that if it is filed during this time, then without any additional fee, and also it will be processed straight through mode and not subject to any approval as well. So you file it and then it will be a straight through approval. So and Form 11 without additional fees for financial year 21-22 onwards. So for 21-22, if in the previous year it has not been filed, then we can file it without any additional fee. And for years which are prior to 21-22, so for 2021 also, if there are anything remaining, then only 2 times of the additional fee for small LLPs and 4 times of additional fee for other than small LLPs will be charged, will be levied. And LLPs availing the scheme shall not be liable for any action for delayed filing for Form 3, Form 4, Form 11. So no action, you just make the compliance and get it in order. And also for Form 3, Form 4, which we discussed, it will be on STP mode for annual filing. So straight through process, it will be approved straight away. If it is for change service, then it will be subject to approval by the ROC. And most data will be pre-filled in the forms and there will be options for changing as well. But most data on V3 portal, in any case, we have seen that data is being pre-filled. And filing of Form 3 and Form 4 without additional fee applicable for 1st January 2021 onwards. So for last year, we saw that it was the LLP forms were transitioned into the V3 portal. So wherever these the initial agreement as well as any changes are not complied for whatever reasons, then for 1st January 2021 onwards, there will be no additional fee charged. And for the events prior to 1st Jan 2021, it will be 2 times and 4 times respectively for small LLPs and other than small LLPs. So this was about it, and this concludes the first part of the presentation. Thank you very much. If there are any questions, then we can have. Yes.
Anything Form 11, like suppose one partner has not given his contribution.
Yeah.
So is it possible to put the figure as 0? Does the system accept it? Like
Yes, it is possible. If it is not, so you need to disclose the maximum contribution which the partner is liable actually received, and the other entities disclosure.
he is not filed Form 14.
Hmm. Hmm.
Also flexible.
How many days delay? It would depend on. Okay.
Only that Form 13 is became from 23.
Hmm.
It was filed in 14.
Hmm.
What is the
Then It is this condonation application compounding is the only. Yes, yes. Because beyond 300 days, then you need approval with the reason. It is up to 3 years. So 30 to 300 days, it is there that you can mention the reason, but then beyond 300 days, you will need a special condonation order. We will have NCLT because it would depend on the penalties as well. So up to 25 lakh penalty, it is RD, and beyond that, it will be NCLT. So that will have to be done.
What is your experience? They are granting concession or?
It would depend on if there are matters involving shareholders. So these filings which are involving shareholders, then they are taking a strict stance. But it would depend on case to case. We'll have to examine what are the details, why it has not happened, and then accordingly. Yes, sir.
So in case of AOC court, they are raising an statement, it has to be signed by the court director.
Yeah.
So it's okay if you sign with the DSC business signature and attach to PDF without physical sign.
Of course, all the details which are there for signature has to be followed. Otherwise, digital signature you would.
Instead of doing physical sign, you can attach the DSC of all.
Yes. And accordingly, I think also as a good practice in the minutes as well, where you approve, the same needs to be noted that because if you are this virtual meetings are allowed, so then it may be possible that directors are not present at the common location. So then that fact also should be ideally disclosed in the minutes as well, which record the approval, and accordingly you can affix with other details, board, DIN number, and all those things. Yes. Thank you very much. Yes. Yes. Yes.
Foreign entity can be joined as a partner in the LLP.
Partner as a partner. So you need at least one Indian resident. Up to one. So then that is subject to, of course, this FEMA regulations and RBI compliance. Under the LLP Act, you need at least one this Indian resident up to 120 days. So that was criteria. Yes.
I had agreed for conversion of private to LLP. Then should I file the entity 14 again?
This will have to be examined based on detail whether it is. I mean, if it is not happened, then it will lapse. I think. This. Yeah, it has not. It has not. It has not. It will lapse. Yes, I think. Yeah. Yeah. Thank you. Yeah. We'll. Yes. Sure.
I think it has been a very informative and wonderful session. To propose a formal vote of thanks, I would like to invite Bhavesh.
You all agree that he has been given a full details regarding how the ROC compliance needs to be done for companies and LLP. I will like to propose thanks to him to give insights regarding how to how to come out from the non-compliance and this LLP scheme which has been proposed recently. I would like to say that means we will continue with a loud applause.
So to assemble the next room for snacks, and we'll assemble that here within 20-25 minutes for the next session. The second speaker is also from here. He's just getting the snacks. आप लोग 2 मिनट बस wait कीजिए.